Well, one advantage is that almost by definition, you're in a segment of the market which is perhaps not as competitive as others. It's contrarian, you're doing what other people are not doing, and that means you have a greater opportunity to pick up unloved, underpriced stocks, which hopefully will outperform in the future. And then on the other side, you're avoiding those areas of the market which are ultra competitive because everyone wants to own them. And if you buy into those areas, you run the risk of overpaying. If you've got a stock that everyone thinks is going to do fantastically, has all good news about it, it merely has to do pretty well and people are disappointed and you'll probably lose some money. But if you're investing in a stock which everyone thinks is going to be terrible and it's only quite bad, you'll probably do quite well. We bought into QBE towards the end of 2016. QBE had been a market darling under previous CEOs. Basically, they'd grown and grown and grown through many acquisitions, nobody knows how many, dozens at least. But eventually everything unraveled. A lot of the things that they'd bought were unprofitable. They were earning downgrade after earning downgrade after earning downgrade. Everyone thought it was a mess. We felt that a lot of the heavy lifting under the then new CEO, John Neal, had been done to refine the business. We felt that insurance premiums worldwide were at a low point in the cycle and at some point would correct themselves. Interest rates were certainly low, and of course, as you probably know, a lot of the income for an insurer doesn't actually come from the insurance. It comes because they get to receive all this premium, which they only pay out sometime later. They call it the float, and then they can invest it. But interest rates are so low, they weren't getting much on the float. We thought that would turn at some time. So it was certainly a contrarian position when we invested a couple of years ago. In hindsight, maybe we were a bit early because QBE hadn't quite fixed everything, and there are a few more unpleasant surprises along the way. But it's interesting now that the market has come around and they can see the simplification story, and they can see the potential for greater investment returns, the potential for better insurance returns because of the changing premium cycle. And so the market is now starting to swing behind the company, and we're seeing actually an improved share price performance. It's really early days, but we built up a pretty sizable position. It's somewhere between 6 and 7% of our portfolio, and we're happy to hold on as long as it takes.